Hi, guys. Welcome to another course on the Accredited Canadians Toolkit. Your host, Sam Perrin, and today I want to talk about what your investor profile is. So I'm going to go through this flow chart to help you to discover where it is that you might fall in the value chain as a real estate investor, if that's something that you want to do. So let's dive in. So this is a flowchart for how to discover your investor profile. And the first thing you want to do is start out with answering a simple question. What is your starting investor capital? Because that's going to determine where you go from there. So if you have $50,000 or more, the answer is a yes. Then you just can follow the flowchart here. Do you have time? Yes or no. If you do have time, then you should explore getting into properties on your own. And there's lots of different avenues to invest in. If you don't have time, then you want to find out, are you an accredited or an eligible investor? Because that allows you to get into private deals. So then you need to decide if you require liquidity or not. If you don't, you can get into land development. Because those things can go well or they can not. And if they don't, you will have your money in there for a very long time. If you do require liquidity, then you probably want something else like private lending, maybe doing something called a joint venture, where you combine your money with somebody's time and skills or expertise, or private lending. Or private placements. So you can buy shares of other people's deals. There's lots of issuers out there that are offering, shares or partnership units in various real estate deals. So if you've got between 25,000 to 50,000, then you again ask yourself, do you have time to be getting into, becoming an expert at real estate? If you do, then again, you'll want to be looking at properties or joint ventures. And if you have less than $25,000, the question you got to ask yourself is what skills you have. And I'll touch on skills more in a little bit. So the next question you're going to want to ask yourself is, can you use your job or assets to qualify for mortgages? If you can, then you are going to be a valuable joint venture partner to somebody who can't. So you can use your ability to qualify for that mortgage to get the to get the bank to fund some of the deal, and then use someone else's skills, expertise, and potentially money. There's lots of ways to put deals together, and you can add your ability to qualify to make one of those deals go through. Now, if you can't qualify for mortgages and you don't have any money ready to go, then you need to fix your ability to qualify for those loans, or you need to upgrade your skills. So one of the easiest ways to upgrade your skills is to try and house hack where you live. Everybody's got to live somewhere. If you're renting somewhere, then maybe you can rent a place with extra rooms and have the roommates pay enough where you get to live for free, and that gets you more time. And if you have time, then you can use that to upgrade your skills further. And that's the goal all of us are trying to do: buy back your time, and ideally have enough income to use that time to do fun things that you want to do. So if you end up starting at the bottom and you're renting a place and renting extra space to roommates, or if you own a house and you're renting an extra room or two, or maybe you have a basement that you're renting, then you're also building skills, management skills. So that's it's a valuable thing to do, and it's how I started in my real estate journey. I had roommates sharing the rent when I was in college, and then when I bought my first house, I had a basement suite, and that income helped a lot to get ahead. Read books, of course. Take courses. Paying money to learn some of the shortcuts that others before you have learned, or business models that are working right now. Very valuable. Always worth the price of admission. You can if you've got enough money, you can hire a private coach to really accelerate things for you. There's lots of free information online and lots of podcasts. So if you're a self-starter that can take information and act on it on your own, that's a great place to start. And find ways to increase your cash and your income and to reduce your debt. So maybe you got to sell that brand new car that you're making payments on that doesn't allow you to qualify for that mortgage, and buy and drive around a 10-year-old car that doesn't have a loan. So there's always things that you can do to improve your circumstances as far as the lending environment goes, and as far as upgrading your skills. So what kind of skills do you have is the next question that you're going to want to ask. Because if you have time and you have skills, then there's a lot that you can do. So, there's all kinds of things that are needed to be done in a successful real estate portfolio: renovations, management, and putting the deals together, negotiation and networking. So as a real estate investor, some of the jobs that you can have and some of the work that you can offer into a deal are, the handyman, working partner. And because if someone was to use a traditional service provider, they're going to be paying a tradesman between $50 to $150 an hour, even more. I've seen, some plumbers are getting billed out near $200 an hour, and contractors like drywallers and floor layers, they're typically going to charge you per square foot, or a contract price, to do the job. So that's that's where a lot of people start, because they know how to fix stuff around their own homes, so they can translate those skills into a rental property. Management skills: you could be a GP, like a general partner for a partnership. You could be a developer, or you can be a director of a company that purchases and manages real estate. And that's a valuable service, because a general contractor who is going to say take care of building a house or a major renovation, they're going to charge up to 15%, or I've even seen more, of the total project cost. So that's on a cost plus basis. Whatever the cost is of the project, they can stay on budget and meet the targets. It's a whole business in and of itself. But typically, they're making anywhere 10-15% or more of the value of that project. So an example I have is we had a fire at one of the apartment buildings, and the general contractor came in, and to do the rebuild, he was charging about 15% of the project value, and that was $1 million, or maybe a $1.2 million project. Lasted about a year and a half, and so on $1 million he made $150,000. So it's a very valuable skill if you're able to provide this to some partners. Mortgage brokers, people who are going to get loans for the properties, they're making between 1 to 5% of the loan amount, plus fees, depending. And property manager is obvious. That's what most people would think of when they're thinking of management within real estate. And I covered it down here a little bit. Property managers, they'll charge, depending on the size of the portfolio and the level of service they're providing, between 3 to 12% of rents collected. And if you're good at negotiation and networking, you can be an educator or a coach. You can be a syndicator, where you're putting deals together, you're gathering groups of investors to buy bigger deals. And you can also self-manage your properties if you're good at negotiating, networking. You've got a good network of trades you can call upon, or you're good at negotiating fair wage with staff, so that you can have in-house staff, and that can bring efficiencies to the portfolio. Within the traditional service providers, realtors will charge anywhere between 1 to 10% of the sale price, depending on the market that they're in. That's what a licensed realtor might do. A syndicator usually works on the real estate investor side. They work for a share of the deal, whereas an exempt market dealer who's going to raise the money, they're going to take between 4 and 5% of whatever funds are raised, and that's all they do is go out and raise money from investors to invest into deals. And yeah, we talked about property managers who collect between 3 to 12% of the rents. So that about covers it for where you might fall in the value chain depending on what skills you have. And the main question is, how we're going to use your time, talents, and treasure to achieve your goals. And, I'll touch briefly on the types of property investments, just an overview. And this is going to be, I'm going to dive deep into this in future videos and talk about the different strategies and the pros and cons of each. But if once you're getting into properties, most people make their money by buying and holding, just like anything, stocks or whatever. And there's so many different things, properties that you can buy and use the income to sustain itself while inflation does its work, and the value of that property increases. And I talked about it a little bit in the last video, how if you add a little bit of debt as a mortgage, you can double or quadruple the amount that you're getting from inflation, depending on the loan to value of the loan. If you're just beginning, a lot of people are trying house hacking because it's a way to get a lot more income from properties. You don't necessarily need to buy properties at a steep discount to make this work. Some people make a very good living at this. Sometimes you don't even need to own the property to do this. So I know a guy that made a really good business when Airbnb first came out. He would rent a bunch of places and then turn around and Airbnb them. And I think he had something like 50 of them, and he was making some really good revenue off of that. The hotel industry lobbied against that and got some rules passed to limit Airbnbs in British Columbia and in other jurisdictions as well. But I know a guy that made a lot of money housing drug addicts, but that is an industry that's fraught with issues in and of itself, and the real estate, owning the real estate is kind of the real income is made from billing insurance companies for the recovery programs, but the real estate can be a component of that. And we talked about roommates. Basement suites is another very common one. Most people aren't using their basements very much, so you can put in a basement suite and make some revenue off of that. And you can make enough income off a basement suite. You take a house, you put a basement suite in it, almost any market will have a pretty good cash flow if you put 2 units into a place that usually has one. You got to be careful of your local municipality or rules. Make sure that the basement suite's conforming, so they don't come in and shut down that basement suite and take away that income. And finally, quick turn. So lots of people make really good businesses out of this. You're using real estate more as inventory, and if you're good at finding deals, then you can cheap and get a significant discount from and when I talk significant discount, I mean you want to be buying places at 40 to 60 cents on the dollar. So if the after repaired value of this place is going to be $100,000, you want to be buying that property for $40,000 to $60,000, and then doing what you need to do to fix it up, because it's very easy for a quick turn project to go bad, and then all of a sudden you're into a buy and hold, and potentially it's not a property that you would have ever been interested in doing buy and hold. But this is where the strategy of buy, renovate, rent, refinance starts. The only way that the BRRRR strategy works, where you get all of your money back and even a little more, is if you do really good on the buying. So I'll talk about how to do really good buying of property, and there's all kinds of strategies around that. Doing for sale by owners and yellow letter campaigns and bandit signs, and writing a ton of offers. It's a volume business. And then there's rent to own. I've done rent to owns. Basically, you are you're helping somebody who can't get credit on their own get into a house where they're going to rent it from you, and use it, and then use some of the payments of rent towards the down payment so they can buy it from you. And you're designing your exit in advance, so you know what your return on investment is going to be. The issue here is if the market turns bad and they can't complete, you get the house back, and hopefully the market's not too bad where you can't re-rent it or get someone else in there. Typically, these deals aren't great because if your rent-to-own tenant has put a whole bunch of extra money into the deal expecting to buy it, and then they can't, it puts you in a place potentially of high conflict. And the flip side's true as well. If the rental market, you're investing in a place that does very well, in my situation, the tenant got an extra $50,000 or $75,000 of equity that he kept, which we gave up because after 2 years, the real estate market really took off. So he made a lot of money on that deal, much more money than we did, which doesn't make a lot of sense. So I'm not a huge fan of rent-to-own. Some people have very successful businesses at it. Again, it's a volume business. Options and assignments are great. You get a property under contract, and you turn around and sell that contract to another investor for a fee, $5,000 or $10,000 or whatever. Agreements for sale are basically a type of vendor financing. There's fix and flips, which is you buy the place at a discount, fix the problems in it with a renovation, and then resell it for market value. It's easy to go over budget on these things, so you got to be essentially a very good contractor to stay on budget and make sure that your profits are there. And then there's other strategies around quick turn as well. Simultaneous closings is kind of a flip side, or it's a type of assignment deal, which may or may not be allowed in your jurisdiction. But quick turn real estate is a good way to build up some money, either to support your income or to get yourself into buy and hold. All right, that's the overview. I hope it was helpful.